What are 5 ways to invest for income? Sometimes you just need cash flow.
Hey everyone, it's Cade and Bobby here with Mountain Goat Wealth Management. We're financial advisors helping you on your climb to retirement. And today's topic is 5 ways to invest for income, Bobby.
Yeah, what are the 5 ways to invest for income? Well, one, you can invest in bonds, right? Issued by governments or corporations, very stable, preserve your capital. Two, you've got dividend stocks. You'll be able to get some income coming in plus the potential for growth. Three, enhanced dividend ETFs. These can get you a much higher return by having dividend stocks with call options written on top of them. Four, structured notes. These are typically issued by investment banks. They can have higher returns, but your capital's tied up for 1 to 3 years without a secondary market. Five, fixed indexed annuities. These are guaranteed for life to pay you a certain amount of money until you die. So very stable, low growth, and high cost.
All right, so that's our overview of 5 real quick. So let's dive in and break them down a little bit more.
Sounds good.
Okay, so starting with number 1, bonds. Pros and cons.
Well, bonds, you're looking at like 3 to 6% potentially. There are some tax benefits for government issued bonds, so that's an advantage. They are good for capital preservation, but they have some limitations, right?
Yeah. So with the bond, you're generally not going to get as high a yield as you could with other investment opportunities for income. You also do have interest rate risk, as bonds yields are generally tied to the market interest rate. And you do have some that have tax benefits, but others that don't. So that's something you need to keep in mind.
Yep, totally. How about dividend stocks?
Okay, so dividend stocks. These are an interesting one because it allows you to get cash from dividends paid on the stock while also still owning the stock, so you have some upside potential. The stock could grow. These, if they are qualified dividends, you actually are taxed at capital gains rate rather than ordinary income tax rate, which is much less.
Yeah.
Anything else?
Well, I mean, they have a downside too, right? Which is if a company gets strapped for cash, they may not pay a dividend,
Right.
right? So
It's not guaranteed.
it's not guaranteed that
Yeah.
it's going to be there. I mean, companies are incentivized to keep it going, but it just might not happen.
Yeah, exactly. So that moves us to the third one, enhanced dividend ETF. So this is like, you think of it as a bundle of those dividend paying stocks together in a fund. And on top of that, the manager of the fund will, write options on it basically to enhance the yield. So you're getting, upwards of 12% right now on some of these ETFs.
Yeah, they've become really popular recently. Some of these are, 8 to 12%, some even higher. And so people are very attracted to that enhanced yield. There's a lot of advantages to it. One of the disadvantages, though, is just that these can be taxed at ordinary income.
Yeah, it can be, which is generally higher for everybody than capital gains rates. There also could be some capped upside during market rallies as well, but that's a great product to think about in ETF. Number 4, structured notes. So this is a really interesting one that maybe some of you haven't heard about. This is a way to have your money locked in for 1 to 3 years with a bank typically. These are typically only offered through investment banks, but then you can get a pretty high rate. Kind of think of it as like a CD in a way. Your money is making money sitting in here, so it's illiquid. It's not something you should consider you can access for that period of time, but it can pay at a good rate depending on what sort of note it is.
Yeah.
So.
Well, I also like that they have downside protection
Right.
as well. And that's very attractive, right? If you think that the market may just be going sideways or it may be even going down a little bit, you can set these up to have a certain amount of protection to say, well, if the stock market only declines by 20%, my capital is still preserved. So I don't know. They're complex. We should probably do a different video specifically around
We'll
these.
dive deeper on those for you as well, but it's a great option to consider. And then number 5, fixed index annuities. What do we like about those?
Well, a lot of people like the security, like they are guaranteed, right? They will pay you for the rest of your life. It's comforting to know that you're just going to get a paycheck in the mail every month.
Yep.
And a lot of people will structure their living expenses just based off of this.
Right.
Maybe you're getting close to retirement. Maybe you have an IRA that you can just convert a big chunk of it into an annuity and just know that I'm going to have my my expenses paid for
Mhm.
for the rest of my life. And so there is some security for that, but downsides too.
Yeah, it generally is pretty high cost. To be able to get paid a certain amount monthly for the rest of your life has a pretty steep price at the beginning. Although many people use, kind of their nest egg or a portion of their nest egg in their retirement accounts to fund these annuities, which can make sense for you if you're someone who likes the reliability and dependability of a certain paycheck every month, and you can make that work.
Yeah. So there's 5 options that we mentioned today. I think they all have their merits,
Yeah.
right? They all have different applications and at different times and seasons based off of your career or how close to retirement, different ones of these make different sense. And so really it's good to have a discussion with a financial advisor to really understand what your needs are and how these might fit in.
Yeah, in this video, we've done just a really, really brief overview of these 5 options. But if you want to dive deeper or see if one of these might be a good fit for you right now, please don't hesitate to reach out to us. You can go to mountaingoatwealth.com. Also, a link in the description of this video to sign up for a no obligation discovery call where we can meet with you and talk through some of these options more in detail with in regards to your specific circumstances. We'd be happy to help you on your climb to retirement.